Okay, everyone, it's just gone 2 p.m. Eastern time. Thank you very much for joining me, and we'll begin the webinar. Just before we get going, a quick risk disclaimer. It's a standard thing you've seen on 100 Forex sites probably. Essentially, it's just saying daily Forex are not will not be held liable for any loss or damage from relying on the information given in this webinar. It's really for educational purposes only. It's not designed to be trading signals. And just remember, there is a risk of loss of capital when you are placing trades, especially with a leveraged instrument. Okay, so with that out of the way, my name is Huzefa Hamid. I'm one of the senior analysts with dailyforex.com. I'm a Forex and futures trader. Now, the majority of my trades are Forex trades, and the majority of those are the majors. So EURUSD, GBPUSD, USD, Swiss franc, Aussie dollar, New Zealand dollar, US dollar, and a couple of others. And I occasionally trade a few futures contracts. So I've traded crude oil before and the S&P 500 futures contracts. I'm done a couple of crypto trades, nothing too big, but I've seen some setups and I've taken those, but I wouldn't call myself a crypto trader just yet. I think really the most important thing I can tell you about me is that I use technical analysis for my decision making. Now, that term TA, or technical analysis, it means different things to different people. But for me, it means that I use the price chart. I happen not to use any real indicators, so I don't use moving averages or RSI or stochastics, etc. I do sometimes throw a couple of Fibonacci levels up on there just to give me some context, but really I just use the price chart and I figure out my own kind of support and resistance levels and what to pay attention to, and just and to identify whether we're in a range or whether we're in a trend, for example. I do look at the economic calendar, but I really want to see, okay, what are the big announcements coming up? And they tend to feed liquidity into the price. If a price is in a tight range, if there's a big announcement around the corner, for example, that's often going to break that price out of that range. But I'm not interested in, okay, this is, say, the CPI number. Is it a good number or is it a not so good number for that particular pair? I don't interpret economic data. I'm based in Toronto, Canada. I'm always curious to know where people are from. I know there are people who have signed in through Facebook here, and there are people on the Zoom call. So if you're on the Zoom call, I'm delivering this through my through a Zoom account. If you're on the Zoom call, just type into your chat window the city you're in, or the country you're in, what time zone you're in. I want to see if anyone's close by or if any countries kind of pique my interest. I'm going to say hi to a few people. Teddy Steen, Austin, nice to meet you. Robin, Indirin from South Africa, Johannesburg. We have a strong South African contingent that follow daily Forex. I don't know why that is, but Centurion 8 p.m. Ghana 6 p.m. My parents right now are in East Africa. They're in Kenya, so I think they're plus 7 hours ahead of me. South Africa, I know, is in the UK time zone. Hey, Don. Hi, Anthony. Michael from Nigeria, West Africa. Yep, 7 p.m. That's UK, yeah, GMT. TC Choi, Singapore, 2 a.m. It's rare that we get the odd 2 a.m. person. So either you're up, you stayed up for me, or you're about to go to sleep. Thank you for joining me. Hi, Don. Don and Claudia, a couple. Nice to meet you both. Great stuff. Thank you for here. I'm always thinking there's got to be someone near me, but I'm never finding anyone in Toronto, Ontario. So I'll say to the Daily Forex people who are listening, we need to fix our marketing. I want to have coffee with some people from here. Chege from Kenya. So my parents right now are in Mombasa. I think they're going to spend 6 months of the year there. Okay, nice to meet you. All right, thank you again. Thank you for humoring me there. That was all for me, not for you guys. All right, so the market outlook. We're going to look at the economic calendar first. I'm going to talk about where you can find economic data. We're not going to go through the calendar. And then we're going to look at the actual charts. So there's a bunch of places you can find an economic calendar. A big source amongst Forex traders is forexfactory.com. It's very readable. The other source is InvestMarkets. InvestMarkets are good. They're a strong South African broker. So for our South African friends on the call today, you can check them out as a broker, but their economic calendar is available to everyone. If you just go to the investmarkets.com, on the education tab at the top, drop down menu, click economic calendar. It's color coded, which I like for like low impact, medium impact, high impact news. And you can filter out certain currencies, etc. if that helps you. If you're just looking at, for example, at USDCAD or EURUSD, you can just filter out those areas. All right. So when it comes to timeframes, the higher timeframes is where I do the majority of my analysis. So weekly, daily, 4 hour, and then I draw an imaginary line, and anything below our kind of the 4 hour time frame. So we're talking about the hour time frame, 15-minute and 5-minute. Let's put an extra light on here. There you go. Okay. So anything below that time frame, hour, 15-minute, 5-minute, I consider those where I really do my execution. So my analysis is on those higher time frame, and my execution is on these lower time frames. So you're going to find that everything I'm going to look at for the purposes of analyzing the market are really kind of focusing on these weekly, daily time frame. I've even got some monthly charts up there because we have some interesting levels at the moment. So let's start off. Everything I'm going to show you is against the US dollar. So let's start off with the EURUSD. EURUSD, this is the weekly time frame. So this is every candle represents 1 week of trading. We're going back all the way on this chart before 2014. So you might ask yourself, okay, I'm a short-term trader. Why do I care? You know, at such a long period of data, does that mean I have to be holding trades for months or even years? Not necessarily the case. I just want to give context in terms of where we are today. So this is the weekly time frame. Now, if you look back at the early 2018, you know, literally for about about 3 or 4 month period, we hit a resistance area around 1.24, 1.26. It's a good 200 pip area. And the price hit that area, marked it with a yellow box, and then it eventually turns right. Initially, it falls in a big way and then scoots on down for about 1.5 years, 2-year period before rising again in early 2020, really as a response to COVID. COVID kind of really changed the metrics of valuations in the financial markets. Now, interestingly, it's gone back up to that area of previous resistance. Now, if you take that and you line it up exactly, you can see how it's come back up to there, and it didn't go as high, but it certainly came back up to that region, and now it's stalled and it's starting to move down. Now, it's taken a second stab on it, and you've had a big down candle about 3 or 4 weeks ago. Really, I think it's made its impulsive move down. So just from that longer term, I'm going to be more bearish when I go down to these lower time frames. So just taking those two zones away, but also from a fib level, my two levels are 50 and 61.8%. I think they're the two most important levels in Fibonacci analysis. It's really in that, what I call that 50, 61.8 zone as well. It seems to be an important zone for this pair. It's gone back up, and it's again met strong resistance at that area. So it kind of further cements my view. Now, zooming into the daily chart. Okay, let's see what's going on there. This is where it started to turn around. So the first level that I identified was here, 1957. Now you can see I'll take it away for a second. You may not see it immediately, but I'm looking at where is price kind of bouncing in and around. So obviously you have a resistance at the top, but that's the level I saw when I looked at the chart. So, you know, it acts as a resistance and a support. And so, you know, it acts as almost, the term I've come across is point of control. Actually came, if anyone here has heard of a trader called Chris Capre, he's the first person I've heard use that term, point of control. I've heard a couple of others use it. So to me, this is a point of control. You know, when it's below that area, I'm more bearish than bullish. Now, of course, a big, more recent resistance has been 1.2243. That's, I think, a key resistance further up, but I'm bearish, especially when it's under that 1957, under that yellow area. Now, just taking that away, so I'm bearish from that point of view in EURUSD. Where can it go down to? The two key support levels I've got are 1704 or or 1.1704, depending on how you state those levels. I think the price will probably tap that level at some point, and below there, 1.1612, so 1612. So those are my next two key support areas. I think the price will probably tap. Obviously, if it taps 1612, it's going to tap 1704. I think it should tap 1704 in the coming days or weeks. I'm bearish Euro USD. I'll just go back a couple of steps and you can kind of see my logic. There you go. Key resistance long term. And it's in a really important fib level. Where we are at the moment, it's in a range, but it's below that point of control in that range and below that key resistance further up. And these are my next 2 points, 1704 and 1612. So bearish Euro USD is my outlook, and those are my two key areas. Okay, GBPUSD is behaving, and you won't be not surprisingly, it's behaving in a similar fashion. Weekly chart, GBPUSD, key resistance early 2018. You line that, you just extend that out exactly. I've lined it up perfectly, and it looks like it's meeting that area there. Not gone as high, but it's certainly stalled. And you've noticed that Euro USD in comparison started to move down out of that range. GBP USD is still within that. And because of Brexit and a few other factors, it may start behaving more independently than the euro compared, against the USD. But I think it's going to follow the same path down, bringing up my fib level. It's not quite reached that 50% level, but it seems to be tapping it. It could take another stab in it before it kind of starts to move down to hit it. Zooming in now to the daily, so it's turning around. I mean, it's in a range still sideways. It's been sideways since the beginning of March. It's been trending up until the beginning of March, and then it's technically still sideways. But these are my two areas. You've got the big resistance at the top, 42.41, and 1.4 is a key kind of point of control. Key resistance there, and then it turned into support, and then it moved away, and then it tested it as against the resistance again. You find that you pick a good level, and you find that you'll see that it will just continue being support resistance. It will start role reversing, and you can buy or sell around that level when it tests it again and again. Now, this is my level that I think it really has to break through to start a decent downtrend, 36.68 or 36.69, if you're rounding it up. So 1.33. So 1.36686. I want to see it break through that to start a decent downtrend. I think it will tap that level. So if you want to go into your 1 hour, 4 hour charts and find an entry point, I think it will go down to that level. And there's a good few hundred ticks there to be taken on short-term trades. USD Swiss franc. Okay. Long-term chart. Now, this is a monthly chart. I sometimes tune out when people show me monthly charts. These things never change. Okay, so why am I showing you a monthly chart? Okay, this is a monthly chart. We're going back to 2003. You can see it was trending down for the longest time, for about not quite a decade, maybe close to a decade if you scroll back a bit. And then it's been sideways. And there's a big bump around 2050. Hopefully everyone can see my mouse. Let me get my spotlight on there. See if that comes up. Yep, my spotlight doesn't come up. So around 2015, see this big candle. So I don't know if anyone remembers, the Swiss central bank used to peg their currency to the US dollar. They would support it. And they made an surprise overnight announcement that they were going to remove that support, and it completely played havoc with dollar Swiss. There was a big, this is the monthly candle, but if you just scroll into the daily, it was just a precipitous drop. It actually took some brokers were near bankrupted, almost bankrupted by that move, because their Swiss positions, or the Swiss holdings, were just completely wiped out. Now, it's stabilized into this range since, and I see it recently bounced off a support level. That was the bounce off that candle there, 87.58, 87.58 really. 0.8756 is where I've drawn my support line. So I think it's going to make a bit of a bullish run after bouncing off this support. So let's scroll down, or zoom into the daily. So I've skipped the weekly, going straight to the daily. You can see now it's a bit volatile, to be honest. I think it's in an uptrend. This is my point of control there. It's a straight, you might think it's a strange point of control. Maybe it should be the support around here, but it's acted as a resistance point, 90, 45, 46. And I think the price will come down and tap that level and bounce back off it. It's a bit volatile though. It's not a clean trend, or it's an unclean, volatile trend. I'm bullish, but it's a hard one to pin. I would want to see price to come down to 90, 40, 45, 46 to test that area as a support to want to consider buying into dollar Swiss. And the next kind of support area, I don't know if it'll come down as far as this, but it's 89.26. You can see it was a key resistance there. When it bounced around, it was a key resistance, then it became a support. So I think that's a possible area it could kind of go down and test. But I think more likely it will test 90, 45, 46, test as a support, bounce off it. I think we could see a bullish run off that. Okay, CAD, USD CAD. My favorite pair because it affects me personally. I live and breathe in Canadian dollars. I buy my coffee in Canadian dollars. Okay, monthly chart. I'm going to move one of my screens here. I don't know if you can see it. Okay, monthly chart. What's going on there? There's a lot. There's a fair bit of action there, but there's the support that I found. I mean, you can see it's made this beautiful double top right up until 2020, between 2016 and 2020, almost to the pip. And then it's just been USDCAD, the Canadian dollar's weakened massively. And then it's just found support at this previous support. So there's a long-term support from 2017. I've drawn it at 2061, 1.2061. Now, you scroll back, I grade this area out a little bit because it's pulled back to this area prior. It's worth noting it's a significant support. Really, I'm placing it off the 28 or late 2017 candle and early 21 two monthly candles really bounced off against it. But it was a significant level. It was a pullback level prior to that. So I think we could be in for a bullish run. You scroll down, I'm going straight down to the daily chart. There you can see the long-term support. So I'm going to go back. I drew that right at the low of this candle. So it did breach this area, but I've kept it here. So you can see it's kind of, for a few 10, 12 trading days, it was kind of flirting with this area. And now it's made a nice move back up. And I think it's, when it broke this previous low on the way down, it broke that and it's now staying above that. To me, that's a bullish sign. Now, it's got all these previous resistances to go through from on its way down, but I think it's up. I think it's over the next week, few weeks, months, it's going to be an uptrend for the USD CAD. Aussie dollar. Monthly chart. It made a resistance here and it's come back up to test it. Didn't quite reach it, but it looks like it's made a stab at it, and now it's now retracing back. Putting up my fib lines right on that. Now, this is, some people may accuse me of reverse engineering this a bit, but this is really where I see where the market has decided to fall. Now, I know there's some higher points up there, but this is really the candle where it broke out this range prior, and then it just took a big, initially a big dump down, and then just nice trend down, and now it's bounced against a 50% level. Now, zooming in to the daily, so you can see the prices over 2021 for the first 6 months, it went sideways, and then now it seems to be breaking down. So what I saw there was a head and shoulders pattern. So there's my left shoulder, there's my head, and there's my right shoulder. So that's a head and shoulders reversal. And that's the neckline for that head and shoulders. 75.81, more 0.7581. And so you can see the areas there where it's developed that neckline. And what I like is it broke through and now it's tested it as resistance. So support turned into resistance, kind of further confirming the level, confirming the downtrend. It didn't want to go back up and breach it. It wanted it, got sold off where it used to be support is now resistance. So to me, that's confirming a potential downtrend on Aussie dollar. New Zealand dollar. Similar situation monthly, 75.58, key resistance level. Didn't quite breach it, but turned around before. It's right in my 61.8 fib level. So hence I'm bearish off that longer term picture. Zooming into the weekly first. I saw this on the weekly. I think it's a really great point of control. 69.43, previous resistance, now support level. It's sitting on there. So it could rocket up, but it's just, so I'm going to just point out some of these candles. So big weekly candle down, and then it made a tepid reversal candle, a bullish candle up, but that bullish candle didn't cover the entire body of the previous red candle. So, and then it slumped since, it couldn't maintain that momentum. So I think this is going to get broken. I think this is just showing that the bears are still in control. It tried to make had one bullish week, and then it just died after that. The momentum died. Zooming into the daily chart, similar situation. You've got a head and shoulders reversal. I'll just pre-mark these. Left shoulder, head, reversal. Neckline there, 71.04, broken down. But really, it's made another support here, 69.43. We'd want to see it break down from this, which I think it will do. I think the momentum has turned now, and it will see a nice downtrend. I didn't mark the support here, but there's support here around about 0.6500. Wow, you're talking a good 400 pips there for the taking. JPY. JPY, this is a simpler scenario. I found yen really, in the last year and a bit, really tough to trade. It was in this downtrend, but it's very volatile, lots of big, deep pullbacks. So there was a channel there, but I just found it difficult to get entry points. Early 21, big reversal up, big bullish run up. It's been a retrace, and it's now seems to be pushing back up. So I marked for me, what I think is a key area, and that is 109.85. I think when it's above that, it's bullish. And yeah, it moved back, it hit that previous resistance, but sloped below that. And now it's coming up to these previous resistance from March in 2020. I think it will just eventually shoot through those. The fact that it's wanting to stay above this previous resistance, I think then we'll just knock out this and this around the kind of 111.50, 112 mark. I think I'm cautiously bullish dollar yen. All of that said, I found it a tough pair to enter, even on the lower time frames. But bullish dollar yen. Okay, so that was my analysis. Just a couple of resources we find, or daily Forex offers, that I hope are useful to you. If you go on the top right, this is really to give you an analysis of the market. So what are the key levels? What are the major trends? Where could it turn around, and so on? And I've shared with you my biases. So I'm biased, bullish and bearish certain pairs. If you want some specific signals, Adam Lemon, a colleague of mine at Daily Forex, really talented guy. Just click Forex signals there. They're giving, as I speak, they're giving a 30-day trial for that. So just go to dailyforex.com, click that 30-day free trial so you can see if it's right, if it's for you or if it's not for you, depending on your time frame or how you like to trade. Okay, some final thoughts. Now, first thing I want to say is if the chart isn't clear, stay away. So you want to be able to have areas which are defined to you. We want to have a clear bias, bullish or bearish. You're not always going to have that. Sometimes the charts are messy. They're not in clear trends. There are, you can't sell the case to yourself even. So, either go to a different chart or look at a different time frame. That's the first thing. If the chart isn't clear, stay away. Mind your risk always. So I think it's best practice, always trade with a stop loss, and then have targets. So in some of the previous charts, I showed a target where a potential previous support, for example. So if whatever your entry is and where your stop is, if that's your potential target, make sure your targets are at least higher than the value of your stop loss. If you're aiming for 300 pips, your stop loss shouldn't be more than 300 pips. It should be 100 or 200 pips. That's what's known as your reward to risk ratio. If you're in the lower time frames, if you're aiming for 50 pips, you don't want a stop loss bigger than 50 pips. You want your reward to risk to always be greater than 1. So you don't want your stop loss to be the size of your value of your stop loss to be more than the value of how much you're risking. That's your reward to risk. And then you want to make sure that you're not risking a certain percentage of your account. So if the value of your stop loss is say 50 pips, you want to make sure, let's say you've got a $10,000 account and you're saying, okay, I only want to risk no more than $200 a trade. The value of that 50 pip stop loss at $200 is $4 a pip in that particular case. So make sure that a single trade can't risk more than a certain size of your account. If you want to reach out to me, feel free to shoot me an email, huzefa@dailyforex.com. I trade full time pretty much. And if you're a trader or you're interested in talking to another trader, I'm always keen to meet other traders. So just feel free to shoot me an email anytime. Tova, our assistant at Daily Forex, thank you. She's been sending you some links over the Zoom chat window for Forex Academy and InvestMarkets. InvestMarkets, I believe, only takes South African clients. So just give click on those links and see if there's something there for you. Thank you very much for joining me today. It's coming up. We're actually running 3 minutes early. Again, thank you very much for joining me today, and see you in the next round. Take care, everyone. Bye now.